afternoon, ladies and gentlemen, to people in the room and to those watching online. My name is Bjarke Smith-Meyer. I'm the finance fintech correspondent at Politico. We are going to get back into the world of tech for this panel and the next panel, which I will also take you through. This one is specifically on artificial intelligence and finance, so assessing machine learning in financial services. Now, if that was basically Chinese to you, I'm going to be in good company with you because it's also a little bit Chinese to me as well. I think the main thing that I want to get out of this panel with these amazing panelists that I'll have, that I'll introduce in a second, is basically, what the hell are we talking about? And what are the challenges that'll come out of that? To help me get through this big question, I have three fantastic panelists. Starting in Brussels in the European Commission, we have Jan Ceyssens, who is the head of digital finance within the Department for Financial Services. And you're working from home, I guess, today, Jan. Looking good there.
That's right. Hello. Yeah, sorry that I'm not in Paris, but very happy to exchange with all of you.
No, very happy you're here as well. From Credit Suisse, we have Sarah Gadd, who is the head of semantic technology, analytics, and machine learning. Thank you very much for being here, Sarah. And then from the European Central Bank, we have Daniela Schackisand, Deputy Director General for the supervision arm of the ECB on governance and operations. Thank you all very much for being here. I'd like to remind the audience that you can ask questions via the Swapcard app, and of course you can tweet on #PoliticoFS. To get on to basically addressing of what it is that we're talking about, actually, I think I'll jump straight to the industry. Sarah, Gadd, I'll come to you. Could you just help me and everyone else online and here in Paris understand what it is that you use artificial intelligence for?
Sure. So, in our domain space, the AI we use is primarily what we call machine learning. Now, machine learning, for those who are not familiar with the concepts, if you think about when you're typing an email and it suggests words for you to type ahead, or your spam filters on your email, or says you forgot to send it to somebody or an attachment, that's all machine learning under the hood, right? So that's a domain space within artificial intelligence. When we're looking at it within Credit Suisse specifically, we look at it in a number of different areas. So can we use it to improve the client experience, right? So when we think about digitization, providing better insights to our relationship managers, what we call decision support, right? Can I make a better decision if I've got more information? Because what machine learning is really good at is digesting loads of information and providing the nuggets back to the person so they can make an informed decision. We also look at it in terms of risks and controls, right? So whether it's anti-money laundering or fraud detection, being able to look across that vast data space, both internal data and external data, to understand patterns of behavior and spot where anomalies might be taking place. And then efficiency, right? If you've got processes where they're very taxing for a human being to do, could they be done at a better rate efficiently with machine learning? And then can you have a human in the loop to help with the final decision-making process and making a better use of people's attributes, people's intelligence, human intelligence, which doesn't get replaced with machine learning or machine intelligence. Our experiences and our knowledge all come bringing fruit in that space, and the two have to work together to be successful.
Yeah, we'll get to that. And maybe you can just help me and understand how it works with data. We were talking about anti-money laundering there before. My assumption is that you have this artificial intelligence, whatever, an online brain that then sits there and then looks at any payments or transfers of money that might look a little bit suspicious in terms of frequency or in terms of size, and then might flag that to someone. I'm assuming that's how it works, but please do correct me otherwise. Could you just also give us a sense of how it works with managing big data? Like you mentioned the fact that AI could basically take a huge amount of information and help make decisions for bankers. So can you just give us a sense of what kind of data you would take and how that would influence decisions?
Yeah, so I'll start with the last question first. I am not from the compliance or risk domain of the bank. I'm actually in IT. So I could talk broadly about how anti-money laundering works. But in terms of the big data, so I do run the big data platform at the bank. And this all starts with the data. right? So it's still the old garbage in, garbage out. You have to ensure that your data is properly curated, that you understand the meaning of it, you understand the use case for it, and you understand whether it's representative or not, right? Does it actually work for your use case? So being able to create those clean data environments which are well governed, right, which have been gone through the quality control that's needed, so that any insights you're generating off that data can be trusted. That won't work unless you've actually curated your data properly.
Mm-hmm. Okay, cool.
In terms of the anti-money laundering side of things, it's similar with many areas where surveillance, anti-money laundering, whatever it might be, what you're looking for is patterns of behavior, right? And you're looking at that based on the data that sits behind what they call the entity or the person. It could be a person, it could be a company. That could be represented in so many different ways, in so many different data sources. And to understand that person's holistic behavior, you need to bring all that information together so you can look at their patterns of behavior and also spot anomalies in those patterns.
Okay, great. So AI can be very, very useful. Jan, I'm going to jump to you to sort of get the sort of probably a little bit more of an overall view from the Commission's point of view before I then come to the ECB and Daniela. But what the Commission's strategy when it comes to how artificial intelligence is used in finance is that bits of legislation or rulemaking have kind of been caked into different pieces of legislation. Now, I'm just wondering, can you give us an overview about where it is that the Commission has actually tried to influence the way that artificial intelligence is used in finance?
Yeah, thanks. And let me maybe take one step back. I also, building on what Sarah has explained very, very well from really the practical experience of this. I mean, we have here, I think, opportunities and risks. So indeed, I think from the Commission side, and that really cuts across whether the work of Mrs. Commissioner McGuinness, whom you had earlier today, whether that's Commissioner Breton or Mrs. Vestager, actually the two big principles are basically excellence on the one hand and trust on the other hand, basically. Excellence, making sure that Europe has really top-notch artificial intelligence technologies, but also the trust that indeed that those technologies are in the end used in ethical ways for good purposes and are not actually abused. And how are we looking at this? On the one hand, I think it's a message of support. I mean, we're providing financial support actually with the Digital Europe program, with Horizon Europe. I think overall are leveraging more than 20 billion euros per year actually to support development of AI. We are actually trying to work with our data work, provide the support and help actually to have the data available to train AI to make it actually practically usable and meaningful. And also we are supporting indeed public authorities. We're helping support financial supervisors actually to get on top of things and provide their training support. So that's, I think, the first big block. It's the support part. And then on the trust part, you know all, and you are working on it every day, that we have a big rule book, a single rule book actually for our banks and insurance institutions already in place. So I think one part is simply to work with the supervisory authorities, the ESAs, ESMA, EBA, and EIOPA actually indeed to provide guidance on how these rules are actually being applied to artificial intelligence. And then I think, secondly, we have identified a couple of specific cases, few but important ones, where indeed the use of AI can also have exclusionary effects on fundamental rights. For example, that people are, because of possibly of their gender, possibly of other particular data points, actually excluded, for example, from mortgage financing or other matters. And where there are those kind of more specific risks, indeed, then we have proposed the Artificial Intelligence Act, which actually sets out particular risk management requirements in those areas. And we have done the same actually in the area of consumer credit, where we also indeed see a similar risk. So I think that's really the three steps: support, clarity and implication of existing rules, and then in few limited areas where there is particular risks for fundamental rights, actually targeted additional legislation.
I'll come to the idea of support a little bit later on, as well as the question of trust and potential discrimination. But I mean, and do correct me here if I'm wrong, Jan, but I mean, in the Artificial Intelligence Act, the Commission caked in a pretty significant piece of rulemaking in that it would then make the European Central Bank, in effect, the supervisor of artificial intelligence in banks. banks. And I'll get to Daniela about how that works in a second. But more specifically, could you just talk a little bit about what it was that the Commission put inside of the Consumer Credit Directive? Could you just explain that one?
Yeah, so I think there indeed the principle is that if you are using data supported actually methodologies to assess a credit application, that indeed there needs to be the right of explanation and the right of a kind of a human review for the actual decision. So you can use artificial intelligence, you can use any other data-driven processes, but if the consumer is then rejected his credit claim, his credit application, actually, you need to have the right actually that a human being is reviewing the decision. And I think that's one of the fundamental principles really of, I think, also ethical AI, that there is on the one hand the mechanisms are explainable and that there is what we call the human oversight of the whole thing, which I think both Sarah and Daniela actually know much more about than how this works actually in practice.
And we'll get to that in a second. Daniela, from the ECB's point of view, I'd like to come to you. As I mentioned, in the Artificial Act, you were given a nice piece of power right there. Could you just explain to us how that supervision of artificial intelligence would work?
So the Artificial Intelligence Act is not yet adopted. So the ECB is there suggested to have two pillars. One is really in the area of prudential supervision, and that we are happy to take on. We are a bit more concerned about the role of consumer protection, because that's not our piece of cake, if you want to call it like this. It is not our, we are prudential supervisors and we would like to stay in that area. Then how we would supervise artificial intelligence in banks. In the Artificial Intelligence Act, there's a risk focused. So the higher the risk in a certain application of AI, the more supervision you would need then. And for example, for credit scoring, that would be the highest. And there we have already a lot of experience. That will be model supervision to a large extent. And we already do that now. Supervising models, and some of them, they are very, very complex. What is different in artificial intelligence is that it is more data, it is more dimensions, and then if it is this machine learning, it is that the machine is changing over time, the algorithm is changing over time. And how we would like to approach this, it is what Sarah already said. You need good data, you need explainable algorithms, you need also explainable outcomes, and you need that the final decision should be taken by a human. And that is then in this area of governance and accountability, that a bank using artificial intelligence for such decisions needs to be also accountable for the outcome, and needs to be able to explain the outcome, needs to be able to explain the algorithms they are using. And then because the machine is learning over time, you need more testing, more checking, more oversight, and these are the things that we would need to look into then.
Yeah, I will get on to the question of the human touch in a second, but when you say testing, what exactly does that mean? How do you test AI?
It is not yet, that is now learning by doing. So what we as supervisors are doing at the moment, we are using AI ourselves. So we are doing supervisory technology, and that includes also machine learning and natural language processing. And so we are experimenting with these technologies ourselves. And by doing that, we believe that we are able to also know which standards we can set on banks, how to then supervise their own machines. So we are applying the methodologies, these modern methodologies and technologies ourselves. And by doing that, we will also be able to set benchmarks to banks. So if you say how you would test it. I think Sarah would be better in explaining that you put a product into production, and then the product is in production, but it needs maybe little maintenance. I mean, it will need maintenance and updating and so on from a technological point of view. But if it is artificial intelligence and the algorithm is changing because it learns, you have to be able to understand what the machine learned, and that you don't create biases because the machine took too much emphasis on certain data set, or that the data set was wrong, or it was not reasoned enough, and so on. So you would have to, at certain stages, test the machine with test data, for example, with real data, and see what changed over time. So you have to have more frequent supervision of the algorithm, of the results.
Yeah. I mean, you keep saying algorithm. I guess one way that is oftentimes explained to the average Joe, or that's worked for me in any case, is that people talk about black boxes. Like, you don't know what's in the black box, and if the artificial intelligence sitting inside the black box also learns on its own, I guess that throws up a lot of questions. Now, I think I would actually just like to throw that back to Sarah. Can you? I mean, would you be able to, at any point, know yourself as a bank what's going on in the black box, or would you kind of run the risk of a robot taking over the bank?
No, I don't think we're talking RoboCop here. So I think most the use and application of machine learning today is not the black box scenario. It's fully explainable. It's very transparent. You know exactly how decisions are being made, and you can evidence that through. And I think, to Daniela's point, the trick there is to make sure that you've got the right safeguards in place. So if something goes wrong, you can switch things off. But also that you've got the right monitoring, because there is a big validation before machine learning is put into production. But just because it's good when it goes into production, if it's constantly learning, you need to make sure it remains good, right? It remains ethical, that bias isn't being introduced. So you have to have that ongoing constant monitoring to be able to detect these things. What they call drift, right? Is it still doing what it was intended to do, or is it drifting off topic because the data's changing? So I think that's, and the decision support, which is put a piece of information in front of a person and ask them to make a better informed decision off that piece of information. The black box really comes in when you're talking about deep learning and neural nets, so quite advanced uses of artificial intelligence. They do exist. They exist within Credit Suisse as well. And there, you can't really understand how the algorithm's making the decision. You know exactly what features are contributing towards that decision. And there it becomes very critical to make sure you have the right safeguards in place and controls around that. But it's a very limited use case. It's typically when you're dealing with unstructured type information. So Daniela mentioned NLP, so natural language processing. You may be dealing with tons of content, and you want to understand the meaning or the context of the language. That's a good application of something like deep learning. Cars use it when they're being trained on the driverless cars. You know, is it a stop sign? Is it a stop street? Is it a tree? Right, you have to train it through millions and billions of images, and that tends to be deep learning neural nets. So that tends to be the artificial intelligence type use cases today.
Okay, actually, Daniela, I may as well just ask, because Sarah said something quite interesting there. I guess at a very minimum, the ECB or the supervisory arm of the ECB would require that banks have an off button for artificial intelligence, no, in case it gets a little out of control.
I assume so, yes. But it's in the interest of the bank to have this off button, that this machine doesn't take over the bank, as Sarah said. Yeah. I
love that. Okay, thanks for that. Moving on to the sort of more human side of this, because I know that people get run away with the sort of idea that AI is just this big, invisible thing happening. But I mean, Jan, you touched on this. There is a real risk of discrimination when it comes to AI. Now, can you just explain to us, just very basically, how that would work? You mentioned, a company offering a loan, for instance, through artificial intelligence, or rate setting, for instance. Like, if if someone were to walk into the bank and would be then confronted or facing an AI and wanted to get a loan, what would be the actual risk of discrimination?
Well, I mean, there's always a risk of discrimination if you decide on anything, basically. I mean, traditionally, if you're a small bank and you maybe give credit rather to a friend from your sports club than to somebody else, that's also a form of discrimination, of human discrimination. So this is not in itself something which is inherent only in artificial intelligence. But of course, let's say the risk is different. I mean, in traditional credit granting, I think you can check this, and Daniela and her colleagues have developed quite good systems actually to limit this. When you talk to artificial intelligence, of course, the risks are quite different. So it's about indeed looking what kind of data sets you give as input, actually, what kind of then checks and operations are being performed by the algorithm itself to make sure that precisely the algorithm does not look at, let's say, for example, maybe the correlation between gender and repayment capacity or other matters. And those kind of things, so that you don't have an algorithm which may be actually technically perfect. If you have an area where by chance the men are better repayers than the women, basically, that you do not kind of then train the algorithm or indicate it on that indicator, but that you basically indeed look at for other indicators for credit worthiness actually and credit risk actually to input here. So I think that's what it's about, to make sure that indeed that the input data and all the parameters actually are not geared towards those indicators which would discriminate, and where discrimination is prohibited actually, gender, ethics, etc. But that it looks at other more objective factors, which is actually, and then I stop there, also in the interest of the bank itself, because I think we all know that probably these external factors are not very good indicators of real risk, basically.
Yeah.
In that sense, it's also an interest actually in having a good model that you do not actually rely on these probably overly simplistic factors when assessing the risk.
But I mean, another one that's quite interesting is that, I mean, oftentimes if I were to go and get a loan tomorrow, the bank would ask me, where do I live? And I suppose if you were to input information into an artificial intelligence application that you came from an impoverished neighborhood, then the risk is also that you might then get that the AI, the artificial intelligence, might deem you less trustworthy in order to pay back your loan. I mean, that's also another form of discrimination which could emerge. Jan.
Well, I mean, I think that's indeed, I think they're the clear-cut cases, and I before described the clear cases. And then I think, as always in risk assessment, there are the cases where you need to judge and evaluate. Now, of course, indeed, I think it's very, for example, also real estate. I mean, we all know it may be different than if it's located in some areas than in others. So I think there are some objective factors which justify that you actually look also at where people live or other matters. But of course, if that is becoming a de facto discrimination in the sense that basically you systematically allocate a lower score to people coming from maybe ethnic minority neighborhoods or others, then it becomes problematic. But I mean, I think as always on these kind of issues of more indirect discrimination, it's not a black and white thing. You need to always look at, are there good reasons why you are kind of looking at certain factors? Is it justified for objective reasons and not for reasons of, let's say, external factors or let's say inherent qualities of us as human beings.
Yeah. Okay. And then Sarah, I guess what the solution to this would that be? If someone felt that they were being discriminated against, they could then demand the presence of a human being to stand there and either explain the results or to change the offering after a discussion. Right? That's how it would work.
Yeah, and I think what's the positive aspect of all of this is discrimination, as Jan mentioned, has been around forever, right? Somebody's having a bad day, they've got up on the wrong side of bed, whatever it might be, they're making decisions, and they're making decisions based on an emotive human response to the person who's sitting in front of them. That hasn't always been positive. What machine learning allows you to do, or AI, is to shine a light on where that's been happening. So whether it's based on the person's code for where they live, whether it's based on their sex or the race, it's shining a light on that now, so you can understand where those biases have historically existed and then do something about them. I think this is a huge win, I think, broadly for society. In terms of recourse, yes, people always have to have the right to be able to say, I don't agree with that decision. Could you explain to me how you got there? Right? What were the factors that contributed to you saying no? Again, now we have a full data or full evidence as to what happened and what the features were that drove that decision. Whereas previously, it might have just been sitting in somebody's head. So I think this is a great enabler for society broadly.
Okay. Daniela, I'm going to come to you here. I mean, another human aspect of this is that obviously we need the talent in order to be able to understand the tech and then apply the supervision. You guys at the ECB must be hiring loads of tech nerds now, no?
We try to, of course, hire also people from the market. And in addition, we have a huge program to also upskill our own people. So our own supervisors that we have already in the house, that they are trained on these modern technologies, by using them, but also there's a training program that we have for all our supervisors, including in the national competent authorities.
Yeah, no, I mean, it's something that, Jan, you touched on before. It was also very interesting to the European regulators for the insurers, securities markets and banks. I mean, they've actually written to the Parliament before and complained about the fact that they would worry that they might not be able to hire all of the talent needed in order to carry out their new supervisory duties. But you did touch on the fact that the Commission is trying to support this uplearning, upskilling aspect of it. So, I mean, tell us a little bit about that. I mean, the one thing that always comes to my mind is the saying, and I mean, no offense to anyone by saying this, but you can't teach an old dog new tricks. And I'm just wondering, could you, is it so easy to just, tell civil servants who have been in an institution for 30 years, like, artificial intelligence, you gotta learn up?
Well, then really you have to ask Sarah, actually, because she's been checked by the supervisor. She needs to tell you whether they are managing or not, or whether we are managing, actually. But I think, as Daniela says, we cannot all of a sudden out of the blue, let's say, there's a huge need, and you know that there's a huge shortage of staff actually in this area. So that, of course, affects also the supervisor. So I think you need to have an intelligent mix of, indeed, recruiting people from industry and from academia who know this from the start, and then, indeed, also upskilling those who are around. And that's something where, indeed, also Daniela mentioned what the ECB is doing. I think from our side, yes, we cannot create money out of the blue, but we are also with our DG reform. Actually, we have set up together with the ESAs the Digital Supervisory Academy, which is in a way a program which also supports national authorities, national supervisors, if they want to actually upskill their own supervisors, basically. And I have to say, at least but again, maybe you need to ask Sarah on that. From my perspective, I have the impression supervisors are quite on the ball on this. It is also not, now let's be honest, it is not the case that today every single bank in every village is using AI to a large extent. So I think, we also still have the traditional risks. And so I think we also still need the traditional supervisors, if I can say so. But I have the impression that all the authorities, and I think Daniela is here, are actually quite taking this challenge on and are getting their heads around it. So I'm quite relatively positive that we can make that as well.
Great. Sarah, we're running out of time, but I do want to ask you this question on hiring talent, because when you look at some of the people working in the financial industry, droves of them are actually leaving to all of the crypto companies who are then coming into the space. Are you also, I'm saying you generally, I know you're not HR and IT, but have you noticed the fact that it is more and more difficult for even banks to hire the talent needed?
It's actually kind of regional. So we have good streams of talent coming in through some of the programs we do directly with academia. We're also looking more and more for diverse talent in background as well, right? Because you want, especially from ethics, you want people asking different types of questions. So it doesn't necessarily have to be your traditional education routes, right? It's apprentices, interns, people coming from different industries, including academia, who are looking to really execute on live programs, right? Get their hands knee deep in data. So there's a plethora of different places you can source talent from. It doesn't mean you need data scientists. You definitely need some data scientists. But there are a lot of people who bring skills to the table outside of that domain space and then can upskill in. And the tooling is getting more and more commoditized. I referenced your email at the beginning. Do you know what machine learning is happening when you're typing an email? No, you haven't got a clue, but it works for you, right? And that tooling, the ability for the citizen data scientists to actually get on and do it, it's becoming more commoditized and a norm. So certainly, yes, we lose talent to various different parts of different industries, depending what the buzz is at the time, but that's somewhat typical. I think what's interesting or more revolutionary is now the banks, and especially Credit Suisse, turning around and saying, you know what, we don't necessarily need somebody who's got a computer science degree, right? We don't necessarily need somebody who's gone through a traditional education route. We're really interested in what skills you're going to bring to the table, no matter what your background is. So I think that's a different way of looking at it.
Great, thanks so much. That's all we have time for. I think the one thing that I'd like to take away from this this panel debate is that yes, AI can be complicated and very techy, but there is very much a human element on this, not only in terms of discrimination, but in terms of people that we can still hire that understand what's going on. Thank you all very much for joining in today. Our next spotlight discussion will be in a couple of minutes. I will be the one to take us home and take us to the end of the summit as well. The next one is how does Europe intend to navigate the technological revolution? So please do stay tuned for that. We'll be back very shortly. Thank you all very much. Everyone here, please stay seated. Thank you.